Welcome to our latest update on important financial changes that have come into effect starting June 1st, 2025. Yes, that's right. Just when you thought your relationship with your bank account couldn't get any more thrilling, the powers that be have decided to sprinkle a little extra regulatory spice into your life. It's akin to receiving a surprise party invitation, but instead of confetti and cake, you get a dense booklet of revised terms and conditions. What an absolute delight for everyone involved, I'm sure. We're here to help you navigate this fresh wave of financial fun. This week, we'll be courageously diving headfirst into the murky, often shark-infested waters of new credit card rules. Because who amongst us doesn't adore a good old-fashioned shake-up in how interest is calculated and billing cycles are managed? Then, we'll explore the apparently free Aadhaar update service, which sounds so straightforward it's almost suspicious. So naturally, we'll be examining that with our most skeptical monocle. And to cap it all off, the ever-exciting, never-dull auto-debit payment adjustments, meticulously designed to ensure your recurring payments remain just baffling enough to keep you perpetually on your toes, wondering if that subscription you canceled 3 months ago will magically resurrect itself. So please, do try to contain your excitement. Stay tuned as we break down these new regulations and what they mean for you. Because let's be brutally honest, someone has to decipher the hieroglyphics of financial jargon, and it might as well be us, your intrepid guides through this fiscal maze. Our fervent hope is that by the end of this, you'll not only avoid any nasty wallet-thinning surprises, but perhaps also be mildly entertained while learning about the mechanisms designed to, theoretically, protect you. Or, not. All right, let's talk credit cards. Those seductive slivers of plastic that whisper sweet nothings about convenience and rewards, while often leading you down a garden path paved with compound interest and minimum payments that barely scratch the surface of your debt. Well, hold on to your hats, or rather, your over-limit statements, because the guidelines surrounding billing cycles and interest calculations have been given a fresh, confusing makeover effective June 1st. It's as if a committee convened with the sole purpose of asking, how can we make understanding your monthly statement an even more Herculean, mind-bending task for the average consumer? And boy, did they deliver. One of the pivotal revisions, and please try to feign interest for this part, concerns the very determination of your billing cycle. Previously, this might have been a relatively predictable, stable period, like a comfortable old pair of slippers. Now, however, the system embraces more flexibility, a term that, in the delightful lexicon of financial regulation, often translates to an increased number of unforeseen ways for things to go catastrophically pear-shaped for you, the consumer. We're potentially looking at more frequent or less predictable shifts in your statement generation dates, which, if you're not meticulously tracking them, could throw your entire payment planning strategy into a state of utter chaos. Imagine your due date playing a cruel game of peekaboo, but with your credit score as the forfeit. And then, we arrive at the main event interest. Oh, the glorious, ever-accumulating, sometimes soul-crushing interest. The new regulations are purportedly tweaking how this magical money multiplier is calculated, all in the name of enhanced transparency. But let's be perfectly frank, transparently convoluted is still, at its core, convoluted. We are likely to witness subtle yet impactful changes in how average daily balances are computed, or perhaps new rules governing how interest is applied to fresh purchases if you dare to carry a balance from one month to the next. These are precisely the kinds of minute details that could make a substantial difference to the grand total you end up owing, particularly if you're not in the habit of clearing your entire balance monthly, which, statistically speaking, applies to a significant portion of the population. So, what does this intricate ballet of bureaucratic adjustments actually mean for you, the unsuspecting cardholder, just trying to buy groceries without triggering an international financial incident? It means you now have a new, urgent hobby: scrutinizing your next few credit card statements with the intensity of a diamond cutter examining a priceless gem, or perhaps a conspiracy theorist looking for coded messages in alphabet soup. You need to be on high alert for any notifications from your bank. They are, by law, obligated to inform you of these changes, though they often choose to do so in prose so dense and soporific it could be weaponized as a sleep aid. The responsibility, as it so often unfairly is, falls squarely on your shoulders to comprehend how these changes will specifically impact your card, your spending, and your sanity. My unsolicited yet heartfelt advice? Steel your nerves and call your bank. Yes, I know. Brave the interminable hold music, the call center scripts, the existential dread. Once you get a human, ask them to explain in excruciatingly simple terms, as if they're addressing a particularly slow but well-meaning Labrador, precisely how these new rules apply to your specific account. Inquire if your minimum payment calculation has been altered, or if the grace periods for interest-free purchases have been fiddled with. Essentially, you must now treat your credit card agreement like a newly discovered, potentially venomous species of insect approach with extreme caution, study its every characteristic intensely, and never ever assume it has your best interests at heart. Because, spoiler alert, it most certainly does not. It wants your money, and now it has new ways to try and get it. Next on our thrilling agenda of financial revamps, we have Aadhaar updates. Yes, that ubiquitous 12-digit number, your unique identifier that has become as essential to daily life in India as, well, breathing or complaining about the traffic. The big headline-grabbing news here, effective June 1st, is that updating your Aadhaar details is now allegedly completely free of charge. Free. A word that, when uttered in conjunction with government services, makes my skeptical eyebrow perform a complex acrobatic routine. It's like being told there's a free lunch. You immediately start looking for the catch, the hidden asterisk, the terms and conditions written in invisible ink. But for the sake of optimism, let's tentatively take this free offer at face value for a moment. So what precious personal information can you now amend for the magnificent sum of 0 rupees, zilch, nada? We are primarily discussing demographic details, those little bits of data that define you on paper. This includes things like your name. Perhaps you've recently changed it after a dramatic life event like getting married or, more excitingly, entering a witness protection program. Your residential address, because, believe it or not, people do occasionally move from one place to another, a truly shocking concept. Your date of birth, which one hopes is a fairly stable piece of information, unless you're a time traveler. Gender, your ever-important mobile number, and your email address. Essentially, it's all the information that is prone to change over time, or might have been erroneously entered by a data entry operator who was, perhaps, preoccupied with thoughts of their lunch break. Now, this initiative to make certain Aadhaar updates free is, in all seriousness, quite a significant development. Previously, while some initial updates or corrections within a specific time frame might have been complementary, charges were often applicable for subsequent changes, multiple corrections, or updates made after a designated period. This shift is ostensibly aimed at encouraging a larger segment of the population to maintain the accuracy and currency of their Aadhaar information. In an ideal world, this should streamline access to various government schemes and services. In theory, of course. Because the intersection of large-scale government IT projects and the concept of smooth, seamless operation often resembles a rather chaotic multi-car pileup. And how, you might ask, does one partake in this newfound freedom of information correction? The fundamental process, thankfully, remains largely unchanged. You can embark on this digital quest online through the official UIDAI portal, navigating its various clicks and drop-downs, or, if you prefer a more personal touch, by physically visiting an authorized Aadhaar enrollment center. For online updates, your registered mobile number will be your key, as it's required for OTP verification, that little code that proves you are indeed you. For those opting for the offline route, you'll need to fill out the requisite form and submit supporting documentary evidence for the changes you wish to make. The crucial difference now is that the fee that used to be collected at the counter for these specific demographic updates should, theoretically, be waived. Do ensure you confirm this before any attempt is made to charge you for, say, the ambiance of the center. A word of caution, or rather a healthy dose of Oliver-esque pragmatism. While the act of updating itself is now proclaimed to be free, be vigilant that the process itself doesn't ensnare you in unforeseen costs or present unnecessary bureaucratic hurdles. Ensure all your supporting documents are impeccable and in order. Meticulously double-check, even triple-check, every piece of information before you hit that submit button or hand over your form. And if, by some chance, anyone at an enrollment center attempts to levy a charge for a demographic update covered under this new rule after June 1st, politely but firmly stand your ground and remind them of this governmental decree. Perhaps carry a printed copy of the official notification, laminated, as a shield against administrative overreach. It is, after all, your right to have accurate information linked to your identity without being subjected to nuisance fees. Or so we are told. Chapter 3. Auto debit, your recurring payments. Get a makeover you didn't ask for but might need. And finally, let us bravely submerge ourselves into the wonderfully intricate, often perplexing domain of auto-debit mandates. You're likely familiar with this system, that seemingly convenient arrangement where money just quietly, almost magically, departs from your bank account to settle your various subscriptions, EMIs, utility bills, and other recurring financial obligations. Well, guess what? This trusty, if sometimes forgetful servant is undergoing some adjustments. And as we all know, whenever the esteemed financial sector employs the term adjustments, it's usually a rather polite, almost euphemistic way of declaring, "Attention, mortals! We are fundamentally altering the way things work, and you are strongly advised to pay very close attention, lest your bank balance suffer unforeseen and potentially hilarious consequences." So take a deep, calming breath, everyone. We're going in. The fundamental essence of these modifications, which spring into action on June 1st, ostensibly revolves around bolstering security measures and granting you, the consumer, a greater degree of control over your automated payments. Or at least, that's the official narrative, the one printed on glossy brochures. We're talking about the implementation of things like additional factor authentication, yes, more OTPs, for the setup of new mandates, and potentially for authorizing high-value recurring transactions that exceed a certain threshold. Furthermore, there might also be significant changes to the way you are notified before a debit is actually processed, theoretically providing you with a more robust opportunity to intervene and halt a payment if, for instance, you've finally canceled that gym membership you optimistically signed up for in January but haven't used since February, yet they're still persistently trying to charge you. The purported rationale underpinning these changes is, as you might expect, the noble pursuit of reducing instances of fraudulent transactions and empowering users with more direct say over their automated financial commitments. Which, on the surface, sounds absolutely fantastic, doesn't it? We all profess to adore the concepts of less fraud and more control. It's akin to declaring a fondness for puppies, sunshine, and free ice cream. However, the practical implementation of such sweeping changes within complex banking systems can sometimes be, shall we say, a trifle clunky, a bit like watching a giraffe attempt to navigate a china shop. Think of it as your bank enthusiastically trying to install a new, state-of-the-art, ultra-secure front door on your house. But in doing so, they might inadvertently and temporarily lock you out, leaving you stranded on the porch in your pajamas. So, what specific actions must you, the diligent and financially responsible individual, undertake in response to this latest wave of reform? Firstly, and most crucially, maintain a vigilant watch for any and all communications emanating from your bank or your various service providers concerning your existing auto-debit arrangements. They might require you to re-authenticate some of your current mandates or formally approve new terms and conditions. Please, do not casually dismiss these emails or messages assuming they're just more promotional spam. This time, they might actually contain information of vital importance to the smooth functioning of your financial life. For any new auto debits you intend to set up post-June 1st, be mentally prepared for a slightly more elaborate and potentially more time-consuming process. Expect more one-time passwords, more clicks through various security screens, and more prompts asking, "Are you absolutely positively sure you wish to authorize this payment?" The most significant potential pitfall here, the lurking gremlin in this new system, is the risk that some of your existing, perfectly functional auto payments might suddenly fail if you haven't proactively complied with any new re-authentication requirements or updated your consent. This, of course, could lead to a cascade of unwelcome consequences, such as late payment fees, interest charges, or even interruptions in essential services, which is precisely the antithesis of the convenience that auto debit systems are supposed to offer. Therefore, the watchword is proactivity. Review your list of upcoming debits. If anything seems unclear or if you harbor any doubts, do not hesitate to contact your bank or the concerned merchant directly. It's a bit like meticulously ensuring all your financial ducks are neatly aligned in a row before a brand new regulatory floodgate is creaked open. Because if even one of those ducks happens to drown, it's usually your hard-earned money it was carrying. That's all for today's update on the new financial regulations effective June 1st, 2025. Yes, indeed, a veritable smorgasbord, a veritable feast of rule changes, all meticulously crafted and ostensibly designed to, in some way, shape, or form, make your financial life either marginally better or, at the very least, significantly more interesting. We've courageously waded through the treacherous currents of credit card complexities, tentatively celebrated the much-vaunted freeness of Aadhaar updates, and mentally braced ourselves for the impending auto-debit roller coaster. My sincerest hope is that you are now feeling suitably informed, or, failing that, at least mildly bewildered in a more educated and sophisticated sort of way. Make sure to stay informed and adjust your financial plans accordingly. And I cannot stress this enough. These are not merely abstract theoretical constructs dreamt up in some far-off bureaucratic office. They possess very real, tangible, and immediate implications for your wallet, your budget, and your peace of mind. So please, undertake your due diligence. Actually read those notoriously lengthy and jargon-filled emails from your bank. Yes, even the ones with the tiny font. Scrutinize your statements with the focus of a forensic accountant. Do not be afraid to ask questions, no matter how trivial they may seem. Don't let the terrifying monster of financial jargon intimidate you into inaction. Your future self, the one who isn't dealing with unexpected fees, service disruptions, or a mysteriously depleted bank account, will undoubtedly thank you. Probably by affording you a slightly less anxiety-inducing cup of tea. Thanks for watching, and don't forget to subscribe for more updates. And if you genuinely derived some small measure of enjoyment from this perilous journey into the labyrinthine corridors of bureaucratic finance, or if you simply appreciate watching someone else attempt to make coherent sense of it all so you don't have to, then please do consider hitting that subscribe button. We'll continue to be here, diligently sifting through the mountains of fine print and regulatory updates so that you, hopefully, can preserve a little more of your precious time and sanity. Until our next thrilling installment, try your utmost to keep your finances and indeed your sanity reasonably intact. Good luck out there. You're almost certainly going to need it.